From New York to our TV and radio audiences worldwide, welcome to Balance of Power, where the world of politics meets the world of business. I'm David Weston. We're going to start once again today with the markets, and for that we go to Abigail Doolittle. So, Abigail, they shot up on the news of the jobs, but then they've come off of that a little bit.
A little bit they are off those highs, but now trying to rebound once again. But you're right, a very strong jobs report that stocks reacted to extremely well, with futures extremely strong earlier, up more than 1.5%, even more than 2% on some of the indexes. Now off of those highs, the S&P 500 up about 1%, the NASDAQ around the same level, on pace for a record closing high once again, being helped out by some of those FANG stocks. The financials doing well also, though, David, so we have a nice sector composition here for stocks. And on the week, we're looking at an up week. But there has been some volatility recently because, of course, last week was a down week. And before that, there was an up week and a down week before that. So lots of movement here for stocks as the bulls and the bears are battling it out for which side is right around the economy. But today, the bulls certainly seem to have it, David.
So, Abigail, as you say, it's been up and down, although we had that amazing quarter that we just ended. Now, as we go into the second half of the year, you say you think there may be some hints, perhaps some tea leaves we could read that might indicate there's a shoe to drop. Why is that?
It's interesting. So I look at a lot of charts each day, and there's just nuances in some of these charts that suggest that some investors, maybe the smart early money, they're preparing for the possibility of some sort of even shock, some sort of an event that most are not anticipating. Now, this is very, very unlikely. It's just a sense within the charts. But one thing to really keep in mind is the dollar index. There's a lot of expectation that the dollar is going to continue declining. On the year, however, the dollar is higher by more than 2%, and you have the S&P 500 down by about the equal amount. So this is the real driver here for stocks. So if the dollar does drop, as most folks on the street are expecting, as the economy improves, and more so on Fed liquidity, because that liquidity, of course, puts pressure on the dollar, you are likely to see stocks and other risk assets go higher. However, if the dollar rises, and there are technical reasons to think that you could see the dollar index go sharply higher, that could do the reverse. So really some uncertainty out there. But again, today, it does seem like the bulls are trying to take it, David.
Yeah, we'll take it where we can get it. Thank you so much to Abigail Doolittle for that report on the markets. And let's talk now about those jobs numbers we just mentioned. 4.8 million jobs created. That was significantly more than what economists predicted. We want to bring in now Professor Teresa Ghilarducci. She is the professor of economics at the New School for Social Research. So welcome, Professor. Good to have you with us. Give us your take on these numbers. Are we coming back faster than maybe economists thought we would?
I think that the numbers are probably aligned with expectations because the economists who said that they should be a lot worse forgot that the survey is taken just in the first 2 weeks of June. So if we had a picture of the entire month, when the governors of certain states, Florida, Texas, some parts of California, had to re-shut down the economy, I think that the numbers would have looked differently. But what we economists are seeing now is through the unemployment rate to what is causing the economy to get a little bit better, especially since April. And it's not actually the governor's decisions to reopen or not. It's what the government has done, the Fed and Congress, to put money in the pockets of people who lost their jobs. So the shorthand for that is that the unemployment really doesn't matter as much. It's the loss of income that matters. And if we can restore income for people who have lost their jobs and small businesses that have lost their business for a while, then we can actually have no trade-off, between keeping people safe and keeping the economy going. Mm-hmm. I really worry that these numbers are going to be seen as good and that Congress doesn't extend the unemployment insurance.
Well, and there are two ways you can restore that income, I suppose. One of them is through extending some of the benefits that have been granted by Congress, as you suggest, and there is this sort of cliff we're coming up to, particularly the unemployment benefits supplemental coming up at the end of July. On the other hand, we can also have the demand pick up and people go out and spend more money, and that really raises questions that you suggested in some of the southern and southwestern states as they start to close down bars and things, because a lot of the increase in employment was really in things like hospitality and leisure.
Yeah, no, right. And also, actually, I'm looking at the numbers right now, way down in information services, professional and business services, a lot of healthcare, elective surgeries, dental, The leisure and hospitality is probably the stupidest way to reopen an economy and try to goose it in what you said, get people to spend money. Because the leisure and hospitality jobs are the highest COVID-19 risk jobs for very little GDP multiplier boost. They're lousy jobs, and you just don't get the bang, for the risk that you're taking and getting sick. You need the income in order for people to go out and spend. I would much rather see people take their income and go to the dentist, or go back to their doctor for their wellness checkup. That would have a much bigger effect on the economy.
Is there anything, Professor, that we can do to really direct it one place or the other? You said there's the stupidest ways to go to leisure and hospitality. And if you want to go a smarter route, like you just said, some of the elective medical things, is there anything we can do to put our thumb on that scale?
Yeah, the other cliff that's coming up, and we were seeing it this week, is the losses in state and local governments. And state and local governments desperately need more money now to get people back to school. So we now have reduced the safe classroom by 75%, meaning K through 12 kids are going to have to be juggled about coming back to school. Well, we're going to actually need to hire, I say, bartenders and waitresses to become to work in the schools and help everybody go back to school. If we don't reopen K through 12, that's where the first dollar should be spent. Then we are locking a lot of parents out from working. So we need to fix these structural issues that have come about because of the peculiarity of this virus. It is so unlike any other recession, and Congress needs to actually target money for state and local governments. You could do it in a stroke of the pen. Yeah.
I was just saying, specifically on education, we heard from Secretary Mnuchin today saying maybe there should be some more federal support for schools. What you're saying is that's a good idea. What Secretary Mnuchin is saying makes sense to you.
I would have never thought I would ever say this, but I stand arm in arm with Secretary Mnuchin. I think he's been very focused in a very practical way on how to get through this virus and do it smart. So good. That's where the first dollar should be spent. And the other one is contact tracing. The economists are really following the virologists here. And the virologists tell us that we have to test and isolate those who are infectious away from the susceptible, until we get a vaccine. And that just takes person power. And we've done that before. We do it every 10 years with census takers. We now need other numbers. We have a way of getting those extra numbers. So if any of your listeners remember Econ 101, where the economy is really composed of consumer spending, investment spending, government spending, and then net exports, we really should, in the next 6-7 months, see a shift away from consumer spending, to a little more government spending. We've got to get people back to work. We've got to get their kids back in school, and we need to keep incomes going. Incomes are going to the bars for sure, a little bit, and that's why you see those jobs come back. But they also went to landlords, and they also went to banks to pay off their loans. And that's one of the reasons why bank stocks are up, is because we haven't seen the defaults yet. So I hope that Congress really focuses their spending on getting K through 12 back and running. I think that Congress should consider taking over the Medicaid budget from states and local governments. With a stroke of a pen, you could actually release a lot more funds there, and we should extend that UI benefit.
Okay, Professor, really great to have you with us today. That's Professor Teresa Ghilarducci. She's from the New School of Social Research. Coming up next, we're going to talk with the former Secretary of Labor, Robert Reich, who's now at UC Berkeley, about how maybe the pandemic is transforming the labor market. That's coming up next on Balance of Power on Bloomberg Television and Radio.
Spectacular number, and it helps the overall situation enormously. So that's really the key point. We've created a lot of jobs in the last couple of months and the trends continue.
That was Larry Kudlow. He, of course, is a senior economic advisor to President Trump, speaking earlier today to Bloomberg about those encouraging job numbers. We welcome now the former Secretary of Labor, Robert Reich. He's now a distinguished professor at the University of California, Berkeley. He's also the author of the new book, The System, Who Rigged It and How to Fix It. So, Mr. Secretary, thank you so much for joining us. You heard Larry Kudlow say this is really good news that we had today on the jobs. How do you interpret these jobs numbers?
Well, the trend is certainly encouraging, at least relative to May and also April. But we are still 15 million jobs. And let me repeat that, David, because sometimes, the numbers just are overwhelming. 15 million jobs below what we were in February. So this little increase in jobs, that's good. It's better than not having it. But I also want to bring to your attention and to viewers' attention and listeners' attention that the Bureau of Labor Statistics survey was done before the current spike, the new spike in viruses in California and Texas and Arizona and many other places. And the real problem here is that the coronavirus is calling the shots, and it has to call the shots. People are not going to go into malls and take airplanes and do a lot of other things until they feel safe. And unfortunately, with this new spike, we are heading in exactly the wrong direction. We had yesterday 52,000 new cases. We have not had that many new cases in the United States. The record before had been 50,000 new cases. So if you have got 52,000 new cases in one day, which is more, let me just add, than Europe put together, well, you're heading in the wrong direction, not only in terms of the economy, but in terms of public health and public confidence, and all of the basic ingredients in what a good life should be.
And if you look at these jobs numbers, which, as you say, the trend is a nice trend, 2 months now exceeding expectations, a lot of the gains come in some of those areas that really are most susceptible to the reopening or the reversal of the reopening. So what is the smartest thing to do in terms of job creation in dealing with this pandemic?
Well, if you are an employee and you are furloughed, and you are getting paid and you are furloughed, you're in a pretty good position. If you are an employee and you can work remotely and you're getting paid to work remotely, you're fine. My concern is that you've got these two other very, very big groups of Americans. One who are essential workers, so-called essential workers. They are working in warehouses and factories and in meatpacking and in hospitals. A lot of these people are susceptible and are getting the virus in very large numbers in hotspots, and they are infecting other people. We are not doing what we need to do as a nation, not only in terms of contact testing and tracing, but also in terms of providing these people with adequate protection. And OSHA, the Occupational Safety and Health Administration, of which I used to supervise when I was Secretary of Labor, they are not doing their job. They ought to be establishing national standards right now for maintaining distance at work, for masks, for sanitizers, for all sorts of other ways of preventing these essential workers from getting sick. You got the second group of workers we've been talking about, and that is people who are unemployed but also underemployed. We have across the country millions of people, about 4 million people who are getting paid less than they were paid before, because employers know that unemployment is very high and they can squeeze their workers. We've got about 6 million people who are working fewer hours than they were working before, even though they are still employed. We've got many, many millions of Americans who are working part-time, who'd rather be working full-time. They can't find jobs. And then we've got a final group, a very large group, estimated to be about 7 to 8 million people who are too discouraged even to look for work, or they don't want to look for work right now because they are understandably worried about catching the coronavirus, COVID-19. These people are counted. They are not even counted as unemployed, David. The Bureau of Labor Statistics doesn't recognize this very large group of people too discouraged or not wanting to go to work right now as unemployed. Many of them, if they're furloughed, they're called back and they don't go back because they're worried about their jobs, they are not collecting unemployment insurance. And let me just add one other thing to this very disturbing brew, and that is that a lot of the states that had, in effect, moratoriums on evictions, those states are now ending their eviction moratoriums. The federal government has had in place an eviction moratorium on subsidized housing that ends on the 31st of July. Extra unemployment benefits end on the 31st of July, just a few weeks from now. There has been no movement in Congress to renew those, particularly in the Senate, although the House has renewed them, the Senate has not. And this is going to cause huge problems for people and a great deal of harm if these are not renewed.
Robert, let's talk about the sorts of people who are most vulnerable here. The people you just described, whether they've lost their jobs or in danger of losing their jobs or on the front lines in jobs that really make them come into contact with people, with one another, a fair amount. This virus looks like it's going to be with us for some time to come. Do we need to start thinking about how to protect those people over the longer term? I mean, PPE
Absolutely.
is fine, giving them masks is fine, but ultimately, do we need to think about retooling them so that they're not as exposed?
Well, we need the first and most important thing, David, is to make sure that they survive and their families survive. They have a roof over their heads and they're not going hungry. And the direction we're going in right now, with the virus increasing again and all of these benefits running out, my first worry and our first worry should be that these people and their families are going to be imperiled in the end of July, in August, in September. The next big question is, what are they going to do if, as we expect, the virus continues through the fall? And I think that we do have to enable people to work remotely. More people are going to have to work remotely. Employers are going to have to figure out how to enable people to work remotely. And if they cannot work remotely, we've got to get national standards with regard to safety and health in the workplace. And as I said before, we've got to have those be national standards. We can't have one city or one state with different safety standards than another state or city.
Did we exceed what we should have done with the unemployment insurance by actually encouraging people not to go to work?
No, in fact, there's no evidence that we are encouraging people not to go to work. We have a hugely high rate of unemployment. It's very hard to get jobs. When you have a high rate of unemployment, when jobs are scarce because so many people are afraid to go into malls and shops and so many places are closed because of the coronavirus, it is not that the extra unemployment benefits are causing people not to work. Actually, what the extra unemployment benefits are doing is preventing families from going hungry and losing their homes. And we've got to understand that. The Republican fiction that somehow people are being deterred from going back to work is very damaging. It's not only a fiction, it really is, it undermines our understanding of what's actually happening. Millions, we've got, just to put this into perspective, we have not seen this degree of unemployment since the Great Depression of the 1930s. And even with the slight increase, the slight uptick in June, we are still 15 million behind where we were in February. I mean, this is the dimensions here are really extraordinary. David, one other thing, we've got about 14 million people who've lost their employer-provided health insurance.
Yeah, it's truly historic. It's truly stunning. Thank you so much, Robert. It's always great to have you with us. That's Robert Reich. She's the former Secretary of Labor. He's now Chancellor, Professor of Public Policy at the University of California, Berkeley. Coming up, we're going to be talking about Tesla. This is Bloomberg. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Our stock of the hour today is Tesla. It surprised just about everybody on the number of deliveries it had, and it surprised particularly because they had a plant shut down for part of the time. To explain it all to us is Kaylee Line. So, Kaylee, good numbers for Tesla.
Yeah, that's absolutely right, David. I mean, I think a lot of people didn't necessarily think this is going to be possible in the second quarter. Tesla delivering 90,650 cars, well ahead of analysts' expectations of just 83,000 deliveries. And that was with its plant in Fremont, California being shut for 7 weeks because of the virus. Tesla kind of overcoming that challenge by ramping up its production at its new factory in China. Now, I do want to note here that deliveries were still down roughly 5% from a year ago. But when we compare that to the declines we've seen for other automakers, that's a really strong showing. We got auto sales data just yesterday from GM, Fiat Chrysler, Toyota. All of them saw sales declines of at least 34% in the quarter. So Tesla holding up pretty well here. And of course, just because I just mentioned Toyota, David, I'll remind you that yesterday was when we saw Tesla pass Toyota as the most valuable auto company in the world. That's, of course, thanks to the rally it had already seen this year, and with its fresh record high today, it is close to tripling in market value so far in 2020. The stock right now trading just around $1,200 a share. That's about 73% ahead of the average analyst price target, David.
The most valuable, if you look at equity, if you take debt and equity, it's not quite the same story. But it is an interesting question. Are they making any money? I understand they're delivering more cars than we expected, but are they making a profit off of those cars?
Well, that's the very key question. As we know, Tesla has turned profit in recent quarters, thanks in part to subsidies it gets because we are talking about electric vehicles. But this quarter in particular is going to be really key because if they do become profitable on a GAAP basis, so those generally accepted accounting practices, that means it could be eligible for inclusion into the S&P 500 index. Of course, it handily meets the market cap requirements, and as it is the number one car maker by market cap now, but profitability is going to be the key criteria that could get it into that index now. And I would just note too, David, that even if they break even, they still have a lot of cash on hand. Its cash pile is nearly 4 times as large now as it was at the start of 2019, about $8 billion. So that gives it a nice cushion to weather any kind of headwinds it has because of this pandemic, David.
Okay, thank you so much. It's quite a story about Tesla. Thank you so much to Kaylee Lines. Coming up next, we're going to talk with the CEO of Kansas City Southern Railway. He has a railway that's being affected both by the pandemic and by the new USMCA. We're going to talk to him about how those two have come together and what it means for his business in the railroad business. That is going to come up on Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. It's time now for Bloomberg First Word News. And for that, we go to Mark Crumpton.
David, thank you. Here in New York City, kids will be heading back to school in September with social distancing guidelines in place. Mayor Bill de Blasio said today he believes some schools will have enough space to accommodate all students. And for those that don't, school will operate on a staggered schedule. Everyone will be required to wear face masks and facilities will undergo a deep cleaning each day. Florida continues to see its coronavirus numbers spike. State health officials say new cases and hospitalizations jump by the most on record, and deaths climb the most in a month. Florida has had more than 55,000 new cases of the virus in the past week, the highest level ever. Talks between the UK and the European Union over the future relationship broke up today, one day earlier than planned. The two sides say they are still far apart. Talks will resume in London next week. The two sides resumed face-to-face meetings this week for the first time in 3 months in an effort to work out a trade deal before Britain's final split with the bloc at the end of the year. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Thank you so much to Mark Crumpton. Well, the USMCA went into effect yesterday, affecting U.S. trade with Canada, but also across our southern border with Mexico. Kansas City Southern Railroad is one of the companies that really handles that trade across that southern border. And welcome now its CEO. He's Patrick Ottensmeyer. So, Mr. Ottensmeyer, thank you so much for being with us. Good to have you with us. Give us a sense of what the USMCA you think will do to your business.
Okay, thanks, David, and thanks for having me. You know, USMCA longer term for our business will be a very positive, as you know, or for benefit of the audience here. Our company is more committed and more invested in Mexico than most other U.S. companies. Any way you look at our company, 50% of our business, our route miles, our employees is in Mexico. And we provide a very important link logistically and for supply chains between the two countries, moving products such as grain and food products south from the upper Midwest into Mexico. Recently, refined petroleum products from U.S. Gulf refineries into Mexico. And then coming out of Mexico, we have a whole host of industrial products, electronics, automobiles, probably the best example as it relates to USMCA and the trade between the two countries, auto parts going both ways, actually, but finished vehicles primarily coming north out of Mexico. So the USMCA and the resolution of a trade agreement between the two countries and Canada is very important. There's obviously been a lot of investment in Mexico over the last 26 years, and I think a big part of the attractiveness of Mexico, particularly to serve North American markets, is logistics, and we are certainly a very important piece of that. So USMCA and the resolution of NAFTA is very important long term. The most important feature, I would say, most important part is just the resolution of uncertainty, the removal of that uncertainty, and new rules. There are a lot of benefits, a lot of improvements that have taken place with USMCA versus NAFTA, but the removal of uncertainty is perhaps the most significant element, particularly for long-term investment and the strengthening of North American supply chains that have been built over the last 26 years.
Right, and that uncertainty has been there since certainly President Trump took office. I'm sure you'll be happy to have that behind you. At the same time, you mentioned automobiles, automotive equipment being shipped back and forth, particularly from Mexico and the United States. One of the issues there was rules of origin, some of the new rules that at least some people, I think, would say might be more restrictive. Do you think there'll be a diminishment in the imports of automotive goods from Mexico into the U.S. because of USMCA?
No, I don't. I think for the most part, the North American auto companies, there are obviously some areas where challenges will be with the new higher rules of origin, the North American content increasing from 62% to 75%. But there are some phase-in elements to that higher content. There's also a labor provision that requires 45% of the labor to be in so-called high wage, higher than $16 an hour. You know, those are things that will, over time, strengthen wages and jobs in North America. My understanding, talking to our customers, particularly the Detroit customers, is these are not going to be highly restrictive. At least initially, and I don't foresee that this will be a constraint to the movement of parts and vehicles between the two countries. Auto has been a very strong part of our portfolio, represents about 9% of our total business for finished vehicles. And then when you add all of the other components and parts that move in boxcars and intermodal, probably closer to double that, probably 17-18% of our total business, and we see good opportunities for growth.
One of the things that everyone is concerned about right now is a recovery from this economic collapse we had in the wake of the pandemic. Give us a sense of how that has affected your business at Kansas City Southern, and are you seeing a resurgence? We got good jobs numbers today. At the same time, some states are dialing back on their reopening.
We are. We saw, obviously, just like everyone else, we saw a very rapid drop-off in our volumes and revenue beginning in second half of March, and then April and May were both pretty bad months. Then we started to see a recovery in June. most of the auto plants in North America are running again, but our volumes fell by roughly 30% from first quarter levels, and we're back up to not pre-COVID levels. We're still running about 10% below pre-COVID, but our recent trends in volumes and revenues have been quite strong, really across our entire portfolio, but I would say led by chemicals, auto parts, which show up in our intermodal business, and other areas of our portfolio. Grain has continued to be strong, and that's mostly export from the U.S. Areas of weakness would be energy, such as coal and crude oil, and we've seen a little bit of weakness in our paper business. But generally speaking, we've seen a nice recovery, and again, depending on whether or not we have a serious, rebound and kind of reclosing of the economy in certain areas, expect that strength to continue for the next several weeks.
You wrote a piece in the Dallas Morning News recently about the USMCA and using that as a platform for ongoing consultations between the United States and Mexico. One of the problems with the NAFTA is it was really crafted for a different era, and I don't think it sort of modernized itself. You suggest that could address things like trade issues, but even public health issues like we're seeing with the pandemic. Give us a sense of how that might work.
Well, I think the high level of coordination between the governments of the three countries and the private sector, alignment of priorities on things like health and sanitary guidelines that we've all become very familiar with here in the last 2 or 3 months, and in order to keep supply chains functioning properly. So, going back to the auto sector, we've seen difficulty with misalignment of those priorities and those guidelines, and as the economy has been reopening, where certain plants, vendors, suppliers in Mexico have not been designated essential, or there's misalignment of some of these health priorities. And again, it's not at the expense of keeping our citizens safe. It's really just making sure that we have tight alignment so that supply chains can be continue to operate without disruption, and I think going forward that could be a great opportunity for North America. Let's learn from what we've seen here in the last 90 days. There is no doubt with the resolution, USMCA, the removal of that cloud of uncertainty about NAFTA, and couple that with what we're seeing from global supply chain leaders disfavoring extended global supply chains, disfavoring certain markets, particularly in Asia, that all should be very positive for North America and really all three countries, bringing some of those jobs and those manufacturing facilities back to North America. But then the other element of this, which is really more that personal human engagement of the policymakers, that connection with the private sector, to make sure that we're addressing the right issues and protecting that investment to take full advantage of not only the new USMCA, but the trends that are occurring as a result of the pandemic and what that could mean for North American supply chains going forward.
Okay, thank you so very much. Really great to have you with us. That is Patrick Ottensmeyer. He is the CEO of Kansas City Southern. Coming up here, we are going to be talking with Amity Schlaze about her new book on the Great Society. Could it tell us something useful as we try to address economic inequality in the here and now? That's coming up next on Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. There's a renewed focus these days on economic inequality in this country. And some people are saying, we've had some of these problems before back in the 60s, and a response from Lyndon Baines Johnson, then president, was the Great Society. Well, we now welcome the author of a new book on the Great Society, just out. She is Amity Schlaze, and she is going to be with us to take us through whether we can learn or not learn from the Great Society. Welcome, Amity. It's really great to have you with us. So take us through your analysis of what happened in the 60s. Are there parallels with what's happening now, or are there differences?
Oh, there are so many parallels, David, starting with the idealism. They didn't call it the good society. They called it the great society. And that's the kind of idealism we see today. We want to sort of get to perfect. There was also an assumption, and this is important for Bloomberg and Bloomberg viewers, that the economy could pay for anything. You know, we want to have a great society program to eradicate poverty. The economy can pay for that. We want to have total equality in all corners of America. The economy can pay for that. The economy is a given. So that's an assumption now, because I don't think the protesters currently really have thought a lot about what the economy can and cannot support. And a third thing, to get into the detail, was then there was a campaign against the police as well. The police were not defunded, but they were sidelined. There was a great impulse of community action. The federal government spent $1 billion, which I guess today would be $1 trillion, a large amount to empower communities to handle their mayors and their police. So those are three examples of parallels with today, sir.
At the same time, the impetus, the instinct to have what they called the Great Society was not wrong, was it? The fact is, equal opportunity is important in this country. We don't give equal opportunity to everybody. And in fact, we may be losing some of the people who contribute the most to our society because they're left behind.
Oh, the impetus is wonderful. You say, I want a great society. I want America to be better, and I want there to be more opportunity for more people. The only question in the 60s was, do we get to a great society through the public sector or the private sector? And over again, we opted for the public sector answer because it sounded kinder, right? The federal government will do this and that. We didn't say companies will do it. We just expected companies to pay for getting to greatness. And what is interesting about this research that I had, I didn't just look at civil rights, though I did look very seriously at that. I also looked at companies and what they did. And there were companies who did a lot to help people out of poverty. What helps people out of poverty? Often a job or technology. One of the stories that I learned about for this book was that the forerunner to Intel, which was Fairchild, created a chip factory on a Native American reservation in New Mexico that became the biggest single employer of Native Americans in the private sector. The people in New Mexico on that reservation were very good at making chips because of their experience with needlework. Oh, we never learned about that in school. So the question is the same today. Who helps more, the private sector or the government?
Well, that's the question. What is the proper role for government? What's the proper role for the private sector? But does it take both? I mean, were there some aspects of the Great Society that actually did work? I mean, what about Medicare, Medicaid, things like that?
Absolutely. The book goes through all the civil rights laws, and we all feel that the first Civil Rights Act and the Voting Rights Act, which followed it, were necessary. It was important for senior citizens to get health care. That's what became Medicare, and for very poor people to get Medicaid. The problem with those laws was that they basically put an incredible burden on our children and grandchildren. So the positives of Medicare and Medicaid are very evident up front to many Americans. The negatives, the young people may as well be just writing checks because we're running out of that money. So the question, and the general entitlement culture that we should do everything through entitlements was particularly bad for poor people and minorities because it trained them independence. I think we can say that. There's no shame in getting food stamps if you need them. What is a shame, I believe even people on food stamps would agree, is the expectation that not only you, but also your children and grandchildren will forever be on food stamps. That's a sorrow and a lost opportunity for people. And what you see in the 60s, bitterly learned lesson by very well-meaning government, was that sometimes guaranteed income type payments, the sort we're having today, don't work out for the people who receive them and make it harder for them to have a career or advance in it.
This may have been outside the scope of your book. It goes a little bit later than that. But if you go back to the late 70s, early 80s, and you look at income and wealth inequality in this country, it has grown rather substantially, in part because of government action, not in terms of entitlement, not in terms of social programs, but in things like the tax code and how we tax wealth, how we tax capital, things like that. Is that one of the issues that actually the government can have a negative effect on income inequality, as opposed to what you describe in your book about the Great Society?
Well, income inequality, we're all concerned about poverty. The Great Society said as its goal, eradicate poverty. The verb Lyndon Johnson used was cure, C-U-R-E, cure. Poverty was not cured. Indeed, after a point, its reduction decreased in rate. That is, it settled down at around one level and stayed there no matter what, whether you helped the poor in a number of very important and expensive ways or not. There seems to be some section of every nation that will always have some poverty. So the goal was too large. Income inequality, I'm less worried about. Very fast-growing economies always have income inequality. What is worrisome is the sense of those who are poor that they can never make it. Should be all our concern. There should be opportunity for all. What's interesting, vis-a-vis taxes, what you asked, is higher taxes make more income inequality.
Right. We have to have you back to talk about that. But meanwhile, I want to thank Amity Shlaes. She is the author of Great Society, A New History. She's also the chairman and CEO of Calvin Coolidge Presidential Foundation. And this is Bloomberg. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. This Friday night at 9 p.m. Eastern Time, Bloomberg will air a special called Unequal America, talking about the way that economic inequality may help influence the election come November. As part of that special, I spoke earlier with Cristobal Alex. He's a senior advisor to the Biden campaign about how President Biden might address economic inequality.
The crisis that we're in right now, this global pandemic, it's forever going to change American life. It's going to change the way that we think about each other, the way we think about our communities, our government, our responsibilities to one another. And you're exactly right. This, coupled with the tragic killing of George Floyd, have put a magnifying glass on the deep structural inequalities, not just the income inequalities, the wealth inequalities, but the systemic racism and the divisions in our life. Those are just more pronounced today than ever before. And working people are bearing the brunt of this crisis in many ways. They're the ones who are putting their lives on the lines during this pandemic as frontline workers. They're disproportionately feeling the impact of lost jobs. And Donald Trump just doesn't understand that. Think about what's happening today. Donald Trump doesn't appreciate, understand, respect the generations of struggles of American workers. Today, his administration is filing a brief at the Supreme Court to rip health care away from 23 million Americans. Think about that, to take health care away from 23 million Americans right in the middle of a global pandemic. It's outrageous. On the other hand, Joe Biden, from the very beginning of this campaign, when I started with him over a year and a half ago, he's been talking about this from the start. We've got to rebuild the backbone of our country, rebuild the middle class. And what that means to Joe Biden is this time along, when we rebuild the middle class, everybody's going to come along. So yes, before this pandemic started, we were already feeling the problems, the divisions. Working families were hurting. The basic bargain was broken. That meant corporate profits were up, wages were flat, the middle class was underwater. But instead of helping, Trump's been reversing overtime protections, eroding labor rights, and worst of all, I think, is giving tax breaks to the wealthy. So what would Joe Biden do? Immediately, right now, in this pandemic, what we need to do is make sure that cash-strapped states are getting the resources that they need to make sure that healthcare workers were on the job, to make sure that teachers were employed, firefighters. We need to extend unemployment benefits. We need to make sure we get bigger Social Security checks. And then we can start talking about a recovery and how we address some of these major issues, really the root causes of many of these inequities. And so as president, he would introduce $1 trillion plus infrastructure bill to rebuild our country and create millions of jobs. He would create a greener economy that works for everyone. And of course, we need to transform our educational system, a great equalizer in our society. And that means student debt forgiveness for families making under $125,000 a year, free public college for students, and really kind of transform the way that we think about education, which again is a big equalizer in this country. And the problems that we've got today are so big that we've got to think about the big challenges as big opportunities. And as president, he'll know how to get things done.
That was Cristobal Alex, who appears on our Bloomberg special, Unequal America. That will be appearing on Friday night at 9 p.m. Eastern Time, right here on Bloomberg. In the meantime, in our second hour of Balance of Power, we're going to talk with Ambassador Thomas Pickering about the big election win for Vladimir Putin yesterday. This is Bloomberg.